Good afternoon all. This is track 3. We are going to have this ESG assurance, readiness, data integrity controls and greenwashing risk. This is one of the emerging areas which is getting global, very important for internal audit to be part of ESG, though we are still not part of the ESG part of it. So we have two speakers. One is Poonam Joshi. She is a ESG project director. I'll just give a brief introduction about her. Poonam is a chartered accountant with 16 plus years of professional experience, currently leading organizations through their ESG transformation journey. As an ESG director, she specializes in integrating sustainability into corporate strategy, ensuring compliance, and delivering measurable impact across environment, social, and government dimensions. Her core expertise include ESG reporting and assurance, carbon accounting and assessment, social and governance advisory, embedding ESG tailored policies that align with business objectives and regulatory requirements, CBAM compliance advisory. Her leadership and past experience include 15 years of experience in ERP implementation and support in real estate domain with proven success in analyzing complex business processes, managing stakeholders, and delivering impactful solutions. She is skilled in team leadership, stakeholder engagement, and change management, ensuring ESG strategies are not only compliant but operationally effective. So I welcome Poonam Joshi ji and also Niharika Sharma. She is the ESG project director and she will be helping. See, what they are going to do is a little different kind of approach. They will have a FAQ because not many people will know more about the ESG and what are the things which are going to be discussed. So they will have a FAQ on this one. Then we'll take you through on the presentation. Is it okay? What you?
Hi everyone. Hope everyone had a good lunch. So we'll try to keep this, as engaging as possible. I'm Niharika. I am from the environmental front. I haven't done any of your internal audit courses, so this is going to be a conversation between someone who does not know auditing and assurance with someone who has experience doing auditing and assurance. So what is...
Thank you for the introduction, sir, but just quickly, I am a chartered accountant. I started off with audit like, most of you all here, and today I am actually entering a very different domain, which is, believe me, very, it's a vast and very new field to explore. So there's, lots. I hope at the end of this session, you all will develop some interest in it and, go and learn more about it. So that's the intent for today. And, the main topic actually is ESG assurance, readiness, greenwashing, controls, etc. But before we get there, I think it is important to understand what is this topic about. When we say assurance, each one of you has done assurance in some way at some point. But when we talk about ESG assurance, what is it that it's covered? So I'll try to keep this, my language as simple as possible. Just a quick check here. Does anybody in this room, have you all seen the BRSR frameworks or, worked on any ESG related any assignments or anything, just so that I can paste, we've met, correct. Anybody else here who has some experience? Great. Okay. But then I think let me pace this session in a way that, everybody gets something out of it. So I'll start with the basics and then we'll take you through the slightly complex topics as well.
Sorry for that. Am I audible? Yes. Yeah. Sorry for that. We were just trying to get something on the screen, which you guys can scan then, and that will take you to the FAQ section. But we'll also do it live for you. So, Poonam, the first question is, what is ESG assurance?
So like I said, ESG assurance is nothing but it's a form of an audit. We can, relate it to audit. And like in a normal audit where, an auditor is required to comment on the financial health of an organization, Under ESG, you are expected to comment on the non-financial health of an organization. So when we talk about non-financial health, it is the ESG disclosures, meaning environment, social and governance disclosures that an organization has to make. So basically, the SEBI has mandated reporting for top 1,000 listed companies by market capitalization to report on their ESG disclosures. And there is a BRSR framework mainly that is, based on which these disclosures have to be made by an organization. So as an assurer, basically we have to evaluate an organization's sustainability performance, compliance and the impact that the organization is creating on the environment. You have to basically provide an independent opinion on the reliability and the accuracy of the data that a company is presenting. This ESG disclosures, typically you will see that it has a lot of qualitative information going out. And there is a subset of the BRSR framework now, or the BRSR comprehensive report, which is called as BRSR core report. Okay? So now this assurance has been mandated for this BRSR core report, which I will like to call a more crisp version of the BRSR, because it has a lot of quantitative assurance ready matrix. So when we say assurance ready matrix, under each of the three main branches being environment, social and governance, you have quantitative metrics being defined. And let me give you some examples. So on the environment side, you have to, as an organization, you have to report on your carbon emissions, to start with GHG emissions. You have to report on your energy footprint, your water footprint, your waste footprint. Okay, so this is all quantitative data, and then you have to report it in a way where it can be comparable with even global parameters. So that's where you have to report it by means of the purchase power parity as well. You have to also highlight what is the GHG emission per production of unit that you have manufactured, for example. Or if you are a service-oriented company, the number of employees and so on. And that's where assurance comes into picture, where now it has become mandatory, and I'll give you more information on it shortly, but it has now become mandatory for top 500 listed companies now to report on and provide independent assurance on the BRSR core report.
Okay. So now what are the key assurance standards that refer to ESG assurance engagements?
So when we talk about standards, the ISAE 3000 standard is the umbrella or global standard that is used for all assurance related assignments. It is the most commonly used global baseline also for ESG assurance. This is soon going to be replaced by something called as the ISSA 5000, which is going to get introduced in December 2026. And again, I'll talk a little more about it later. But the other standards that you could refer to is ISA 3410, which focuses on GHG specific emission statements. So any company who is by law required to prepare GHG inventory reports, carbon disclosures or emission reports for regulatory requirements, or even for investor reporting, they would typically refer to the ISAE 3410. There's one standard, AA 1000 assurance standard, which is issued by accountability, and this focuses mainly on accountability principles. So the inclusivity, materiality, responsiveness, impact, and so on. But the most relevant standard for all of us as auditors would be the SSAE 3000, which I think some of you must have already come across. So SSAE 3000 is issued by the Institute of Chartered Accountants of India. And again, it focuses on assurance on the environment, social, and governance disclosures. This standard would be relevant for limited as well as reasonable assurance, and I'll explain what that means shortly. But I would say this is the most or highly relevant standard now, and I will repeat that it's relevant because it's going to be mandated for, the assurance or assessment is going to be mandated for top 500 listed companies by market capitalizations from this financial year.
Okay, so you had mentioned ISSA 5000 and you said that you will speak about it later. So why is it so important?
Right. So first of all, this is an international auditing assurance standard board that has published this ISSA 5000. Okay. It is considered as a benchmark sustainability assurance standard, which is designed just to meet the growing demand for global applicability of ESG assurance. So in that sense, we can say it is a purpose-built standard which focuses only on or provides more guidelines on how assurance has to be performed for ESG-related metrics. Okay. And it is more like a comprehensive stand-alone framework which is suitable for all types of sustainability assurances and is designed to be used mainly for, by auditors as well as consultants of sustainable consulting.
Okay, so we'll come to reasonable and limited assurance in a little bit, but can you walk us through the SEBI ESG assurance updates since they keep updating?
Correct. So the guidelines, and we would like to call it a glide path because in 2023, the reasonable assurance or assessment was actually introduced. So initially it was introduced only for the top 150 listed companies by market capitalization to report and to assure their the ESG disclosures. Then it was extended in 24-25 to top 250 companies, and from 25-26 now it is going to be extended to the top 500 listed companies where we are today. Also from the next financial year, all the top 1,000 listed companies who have the mandate to report now will have to have the assurance also performed. Okay. The other important updates I would like to talk about is the value chain ESG disclosures, right? So if I am a listed company today, I am making disclosures on ESG considering the BRSR framework. But I also now have to report on my value chain. Value chain would constitute my key customers, my key suppliers. There are some I would say there are some, for ease of doing business, the expert committee made some recommendations and they have, loosened up the regulatory requirements around the value chain disclosures to now only constitute top 2% of the value chain, right? So as an immediate requirement, though initially when this came up in 2023, there was a lot of buzzword. All listed companies were sending out these big formats to all the counterparts saying that we need this data to be filled out. But it is extensive data. It at least has, I think, helped to initiate a dialogue with your key vendors and key customers to understand what needs to be reported. But in terms of the mandate now, they have extended it only to the top 2% of their sales or purchases, and they've also given the ability to limit it to total 75%. So that's about value chain disclosures, which now, yeah, of course, and an important thing here would be that the disclosures have been mandated for top 250 entities starting 25-26, which was previously 24-25. So they've given 1-year extension, and the assurance for the same has been mandated from the next financial year. Which means in this financial year, the listed companies will start reaching out to their value chain, the top 250 listed companies, and they will start collecting data, and they will need to get this data assured in the next financial year. That's why it becomes very, very critical. One more thing SEBI has actually allowed, I would say, is the possibility of getting an assurance or an assessment done. So they've given an option there, though they have mentioned that in both the cases there has to be independent assurance or independent assessment to be carried out. Okay. Yeah, which actually gives flexibility for companies to, smoothly transition. And the last thing is voluntary reporting of previous year data is allowed for the first year of value chain disclosures for all listed companies.
Okay, thank you. And now we go into the meatier chunk of this. Can you explain the difference between reasonable and limited assurance?
Sure. So I think I did use these words before, reasonable assurance and limited assurance. But the way I would like to explain this to the auditors in the room is, let's try to say that reasonable assurance is equivalent to an audit opinion over financial information, right? So where the engagement type basically requires a practitioner to reduce the engagement risk to an acceptably low level, right? Here the coverage, because it is reasonable assurance, the coverage for this requirement is mainly on the BRSR core format. If you have seen the BRSR comprehensive format, it is a report which runs into multiple pages divided into over 104 sections. Okay, so that's a very long report. It is very descriptive, subjective in some ways, though it does have quantitative data, but it is pretty subjective, and it runs basically is divided into mandatory or essential indicators, as it is called, about 98 essential indicators, and over 42 leadership indicators or voluntary indicators, as they call it. And all these are divided into these three areas: environment, social, governance. I'll give you more examples on what gets covered under each of these shortly. But coming back to reasonable assurance, where we are talking about the BRSR core format, which is a subset and a sharper version actually of the BRSR comprehensive format, which has very specific measures. Okay, so you will find 4 indicators focused on environmental data. It talks about GHG footprint, it talks about energy footprint, water footprint, and then waste footprint of an organization. And then within that also you will have to provide your footprint per unit produced and comparable measures like purchase power parity and so on. That is about the environment part. On the social part, you are basically required to highlight your cost incurred on employee well-being as an example. So there, again, as auditors, your role would be to understand what costs is the organization considering to calculate, employee well-being costs, because everybody would want to showcase that, they are actually contributing to their employee well-being. But what are the basic components of, that they're using to calculate this? Typically, it should be the medical insurance, the GPA that they provide to employees, any trainings that are provided to employees, medical facilities on premises, safety gear that are provided to the workers, and so on. All this generally constitutes your employee well-being expenses. Okay, so social will cover that. Then, of course, you have to mention your percentage of women participation in your organization. That is a very important aspect. Under social, other things that get covered, would be things like your lost time injuries. So if you're a manufacturing organization, you have to report on your lost time injuries. And then under governance, you have to talk about the data breach incidents that have happened in your organization. You have to talk about the average days of accounts payable to see, if you're, again, within that, it's, as auditors, we should also try and understand if there are any MSME vendors that are, that the organization is dealing with. What is the percentage? So there are very beautiful parameters, the way these BRSR reports are structured. Firstly, they will have indicators which will help you to understand the purchases made from MSME vendors and small producers versus the large producers. Now, if you look at your accounts payable average number of days, you can point to your client telling them that, see, you have about 60% of your purchases being done from MSMEs and small producers, and you're saying that your average days, accounts payable days, are over 60 or 65 days. So that doesn't tie out. Are you actually following the 45 days mandate and so on? Or you at least make them aware of the upcoming regulations around MSME Act and so on. So there's a very tight link between these ESG indicators, if you study them, versus also the financial data that we currently report on. And it's always best to keep an eye, and whenever you get these details from your client, you have to go back and match whatever you can with the financial information. You'll be able to tie out most of these parameters with your financial information as well, rather audited financial statements, I would say. So that would be the coverage for reasonable assurance. Coming to the scope, I think, so there are 30 plus mandatory data points across 9 key ESG attributes which I just spoke about, but very assurance ready, meaning there is definitely for each of these parameters, you will be able to establish an audit trail, go back, even if you're talking about, assessing the carbon footprint that the client has calculated, you have to go back and understand the sources of emissions. So for example, if diesel consumption is one of the major source of emission, you go back and trace those, to your energy bills, diesel consumption bills, and so on. Even for electricity consumption, that counts under scope 1 emissions. You go back and check the electricity bills. Just an instance I would like to highlight here is when we talk about, suppose, diesel consumption, and if I'm an organization, a listed company with multiple locations, say I have 4 factories, and for each of these factories, you collect diesel data from, those different locations. But one location provides you the data in, in liters, and the other location is just giving you that this is the total amount, that we have for purchasing, incurred for purchasing diesel. Then you have to ensure that there is a parity, or there's, a common link between the data that you're collecting. So these things are, what auditors can actually jump in and point out. Right? Okay, and then so this is about reasonable assurance. Again, to repeat, this is applicable for BRSR code, which is now mandated for top 500 listed companies. If we talk about limited assurance will be applicable for the BRSR comprehensive format. And because, like I previously mentioned, it is a very extensive format, a lot of subjective information as well. And that's the reason, here they say that select sustainability disclosures have to be assured. Okay, so there you can compare it to like a limited or interim review that we carry out as auditors. And there, basically, you have to reduce. The practitioner basically reduces engagement risk to a level that is acceptable. So here you cannot go and do 100% vouching of all the information, but you provide your, or you express a conclusion and you say that reasonably, this is what we have. You have to highlight what are the different parameters that you have assured and provide your acceptably low risk statement for it. All right.
All right. So that was a very good brief on how exactly limited and reasonable assurance works. Now, what can assurance providers do to help drive understanding of an assurance assignment?
Right. So as, in fact, even as a part, I will again talk more about it later, but as an assurer, it is always recommended to, even before you take up an assignment, it is recommended to do a pre-engagement review, of what the client has in terms of data to offer, what are their, first of all, you need to make sure that you qualify for that particular assignment, there is no conflict of interest, there is independence maintained, what kind of data they are able to actually provide, what kind of reporting they are doing, are they aware about the regulations under which they have to report. So that assessment is very important because that will help you to decide the nature of your assurance assignment. Once you have taken it up based on the nature of the assignment being limited or reasonable, you will have to structure your the assignment accordingly, the approach accordingly. But whatever be the nature, so for limited assurance engagement, you have to issue an assurance report in the end, like you issue an auditor's report, and you should clearly articulate the nature, extent, and depth of whatever assurance has been carried out. Other thing, I think beyond reporting, assurance should actually be treated as a ground for helping the clients, identify their ESG risks, okay, and provide recommendations and conclusions based on, whatever observations you have as a part of the process, and have ROIs mapped to each of these, So typically we end up just giving out a report and assessing, what is the risk, etc. But if you're giving recommendations, it is always better to provide ROIs because that is what your stakeholders will really want to identify. If you're saying that this is the risk and this is my recommendation, is it going to lead to a reduction in cost? Is it going to help reduce your energy bills? Is it going to help increase your employee confidence in you? You know, whatever recommendations that you are doing, it is a good practice which we also generally follow, is to provide your ROIs, or at least let them know that what is going to be, if you stay status quo, what is going to be the impact, okay, for each of the observation there.
Okay, ROI is the word that stood out. And so what do stakeholders and users of this information, the assurance assignment, need to do with it?
Right. So today it is treated more just like a checkbox, you know, assurance is required, and I don't know if anybody is actually going and reading out that report out there. But again, here what is important is a dialogue with the right stakeholders. So be it a limited or reasonable assurance, first go and identify the stakeholders in the organization. Make them understand the importance of this assurance exercise. Let them know how they can benefit out of it. And then, like I said, if you're highlighting ROIs, they will be interested in knowing, So guide them to go and read the report, and guide them. It's best to prepare an executive summary and, highlight exactly, because that's what executives are going to do. And believe me, in our experience, I think more than the finance team or the ESG team you're interacting with, the management is very much interested in seeing what is happening on the ESG front. And it is a very important question, because investors are asking them, does ESG have a seat in your boardroom? And if the answer to that is yes, and if they are well aware of what they are presenting, how that is being assured, what is the level of assurance, they are going to gain a lot of confidence from their investors.
Okay, so then what are the deliverables of an ESG assurance assignment?
Right. So we saw what is, I hope everybody here is with me on, what is assurance, what is covered under it. We briefly spoke about the main formats that have to be assured, the type of data that has to be assured, the processes in general, the standards that are applicable. Now the ultimate deliverables are actually the independent assurance report, which has to go out. Again, it is prepared in line with SSAE 3000, specifically for Indian companies. And the purpose is to provide credibility to the company's ESG disclosures by offering an independent opinion on their reliability. The other and the most important actually deliverable would be the management recommendation report. Okay? And this is where, like I mentioned earlier, it is important to highlight the ROIs, and maybe I'll give you an example for this. So if I am a manufacturing company and I'm being assured, and as an assurer, I've been given a recommendation saying that you should switch to CFL bulbs. Let's take a very simple example, okay? Switch to CFL bulbs or energy efficient equipment. Then just giving the recommendation, first thing, I'm going to ask them is, does it entail a cost? Okay, and if it does, still if you're, when you put that recommendation, if you tell them, it may have an initial cost, but at the end of it, you're going to end up, saving cost. You're going to end up reducing your energy footprint and ultimately your carbon footprint. Then, that is something which gives food for thought for, the stakeholders. I think another example here could be on the, again, accounts payable data probably. So accounts payable information, if you're going to, like I said earlier, if you're going to highlight to them that you have MSME vendors about, from whom you procure, above 60% of your vendors are MSME vendors, and your average days don't really tie out with the requirements, then that also rings the bell, and you're preparing them, you're telling them that in future there could be a non-compliance. If you're trying to strengthen or help them out with strengthening their policies around conflict of interest, again, which comes under governance, conflict of interest, POSH, other policies, if you're highlighting to them and making sure that they are a part of the SOPs and general structures, you're telling them that, you will be perceived as a transparent organization. And that gives them the confidence to, take up the report seriously, I would say.
Okay, so who can perform an ESG assurance?
Yes, a very important question. So I think all of us here can, but This is pretty flexible in terms of, who can perform. So SEBI permits profession agnostic independent assurance providers, okay? But they must demonstrate independence, competence, and conflict of interest. That is very important. It means that audit firms, sustainability specialists, and advisory firms can perform this assurance. Statutory auditors of a listed company also would be permitted to perform, but provided they maintain independence and do not perform any non-audit services. So any consulting or internal audit services, unless they are provided, then even a statutory auditor would be permitted. So which means if we have to look at who cannot qualify, I would say internal team obviously of an organization, internal auditors of the company, and any consultants involved in preparing the BRSR and BRSR core report. Because generally today, this being a very new subject, companies will probably have a consultant to come and prepare the report for you. So I think at every stage, this is very, closely knit situation, because what happens is there's a consultant who's coming in, he's talking to the different departments, collecting data, and he's the one who's collating the data for you and preparing your report. If you don't have an strong internal ESG committee or a team in the organization, somebody is preparing the report, somebody else is reporting on your behalf, and somebody else is assuring that data. So there is, how do you rely on such information? So we always insist, first thing for any organization is to form this internal capability within the organization.
Okay, last question, but I think the most important one, which is how do you think ESG assurance adds value beyond compliance?
Yeah, actually, honestly, today, it is only looked at from compliance point of view. But if you actually assess and see the parameters that are that an organization is required to produce as a part of ESG disclosures, it adds a lot more value, and it can actually have a lot of strategic value to a company, right? Because even as a part of ESG assurance, your ultimate win is if you're able to help an organization strengthen their internal controls, because you're going to review their internal processes, how they are collating the data, how they are maintaining the discipline within, how they are maintaining the approvals, etc. And ultimately, it is going to help to improve or enhance investor confidence. In terms of identifying ESG risks, I think it proves as a very important platform. As a part of the assurance, you should ask these questions to the client and help them if they're not able to highlight the issues, help them to come up with all the issues related to environment, social, and governance. And when they identify these issues, and first of all, it is important to educate and let them know that be transparent about highlighting your risks, okay? Fortunately, we are at a stage today where this is very new to all, so it is very acceptable still. You're not going to be punished for reporting something immediately. It is okay to openly discuss this, find out what other organizations, what your peers are doing, how are they handling these risks. All of these expertise as auditors, as assurers, we should be able to give it to our clients.
So like we are part of the risk management, we are part of the controls, we are part of the data integrity. So where you can add value is like from an internal team, because I don't know how many people are from the company. As an external service provider and assurance provider is what she's been talking. The same is applicable for us also. How do we get into ESG part of it? Because it has a lot of value addition for the company. So please look at that way, like it's not as she's covering for external, same way it is applicable for internal. How we can add value through associating ourselves with ESG. And there are a lot of areas where we can play a role. Even a ESG certification is there by IA India, IA Global also. So this is going to be one of the more important areas for the internal auditors, because it not only helps in saving cost, it also helps us in getting clients, global clients, who are insisting on this one. And more importantly, we are cleaning all the things, data, control, as well as risk management. Sorry, I just wanted to make it.
Yeah. No, it's all right.
Yes.
I think, see, one question here is, we are all talking about ESG assurance, readiness, and we're talking about listed companies, top 500, top 1,000, and other things. But if you look at it, there's an indirect way that it's been imposed on people, because today, if you look at all of our RFP submissions that we do to many banks and many things, right, 5 to 10% of the score is given to what we do on ESG, because they promise on few things, and they expect their ecosystem to do that. So indirectly, it's imposed on many companies as such, be it medium, mid-sized or kind of mid-sized, small companies. So I think that's where I want to understand what would be the starting point if you want to kind of.
Because I just want to say that don't think only it is an assurance provider who will be adding value there.
No.
That's why I just wanted to just add to that.
No, I get that.
Yeah, I mean, I understand your question, and that's something which we deal with every day, honestly.
Correct.
Okay, so for us also, we are not just targeting, our listed companies where we are auditors or consultants. We are actually wanting to also target the others who are not and prepare them for what's coming. And that's the very big step that we have to take. And there, if internal auditors can actually play a very big role, okay? If you just initiate the dialogue with your clients and open up saying that, let's start off just by educating them. Let them know, make them aware about what's coming, okay? And subtly start introducing small, internal controls, templates, where you help them to start collating this information. We also have clients where we've heard that, we know ESG, we've heard it. We have requests coming from certain customers. We also provide them whatever they ask. But we don't know what happens with the data that we provide. So which is not really, it's not actually something which, or rather that's where we can come in and, help them, educate them on what is going to happen with their data, and also let them know that this is going to somewhere trickle down to them also in the next 2 years, 3 years, 5 years, and prepare them, completely prepare them. And it can start slow. It can start, basically just with introduction of policies. Make sure and help them tighten their policies and structures. Build an internal ESG committee or a small team which will actually, be like, let them educate them, make them take some courses and, get familiar with the broader frameworks, etc. Build that understanding so that, because ultimately when this comes in, they are the people who are going to actually give you the required information. And it's not something you're not trying to scare them saying that there's something like this is coming up. It's just be a way to educate them. The other important bit actually I should talk about is the value chains. So if you are a vendor to a bigger customer, mainly, okay, to a listed company, very soon you are going to be asked to report on your emissions data, your footprints, your social standing, your governance compliance and all of that, which is nothing but the BRSR core format, okay? And if you have to do that, it is better that you start educating. If I'm a listed company, I should start educating my vendors from now itself, because the 2% will go to 5%, 10% very soon. And that's where the havoc will start, So we have, in fact, practices where we've prepared manuals, and we are telling our clients to at least initiate dialogues, make ESG, and to answer your question, certainly you can also introduce by way of, preparing vendor. So every company has vendor evaluation process, right? An annual vendor evaluation process. As a part of the vendor evaluation process, we introduce a small form which, you encourage the vendor to provide this environment, social and governance data. Certainly. You don't ask them to, share their carbon emission information, but what practices are they adopting? What frameworks are in place? Do they comply with, child labor, no child labor practices? So we've prepared forms and we've started asking our clients to introduce those as a part of vendor evaluation process.
Medium-sized and small-sized vendors with whom to kind of probably for them to collect those information or start collating that information is a difficult one, because it's a time-consuming exercise, and then also cost is involved there. So I think that's where I think probably if the government could do something on those lines to support the medium MSMEs and the small size, right? I think that will help is where I feel, because that's on the E part is where we are.
Right, that is the complex part of ESG, because calculating, it's not just about collecting information and presenting it. You have to apply various indicators to it. It doesn't mean if you have your electricity bills, you have your diesel logs and all, you're sorted. No, there are a lot of other things which go into the final calculation, which tells you that this is equivalent to the carbon emission that comes out of it. So yeah, education key, that is the key, but at least giving them a way to start collating, thinking about it, could be a starting point. For sure.
Just request you can complete it, then let's have the question and answer session.
Yeah.
This was very relevant. So I think we are at the end of the FAQ session here, but we'll quickly move on to the other topics. But I hope this was helpful. It just was to set the stage and let everybody understand what we are going to discuss after this. Sure. All right. Thank you. So I'll first talk about a few of the areas, and then Niharika will, because she is the environment expert, I would say, from our side. So she has a lot of experience on the greenwashing and other areas. Sorry? Okay. Yeah. So yes, then let's talk about the readiness of ESG assurance. If we talk of readiness, I'm going to cover it in two parts. One is from the side of the assurer and from the side of the business then. Okay. So as if we discuss about the readiness from assurer side, and I mentioned this briefly previously, was to have a pre-acceptance review being conducted. Even before you accept an assignment for assurance, it is recommended that you should do a pre-review. And what should be done as a part of the pre-review is check permissibility, meaning if the work is permitted under your acceptance and continuance policies. Independence, ensuring independence is the basic requirement, core requirement of assurance. Appropriateness of the subject matter. So the information to be assured is clearly identifiable. First, find out what the organization, is it actually preparing the BRSR core report in the required formats, and then you can actually do this assurance on that data. Because if you're otherwise, they are just creating, or they're coming out with an ESG report, that is not something you should be responsible for assuring. It has to be in the correct format. And then suitability of criteria. So criteria used for assurance, meaning it has to be either in lines of GRI framework or the BRSR framework. Okay, and then availability of evidence to, again, as auditors, we will always ask the question. We never fear to ask the question, backup, right? So always, even for the environmental data, do not hesitate to ask for backups. I'll give you a simple example here. So under the environment side, you're required to, disclose your emissions, but you're also required to show if there's any offset, meaning if you have planted trees or gathered credits, you have to also disclose that information. There could be an organization that says that, yeah, we did a tree plantation of 100,000 plants in this financial year. But you should go and ask them, what kind of plants were actually, because that is going to actually decide the amount of offset, to be calculated. So even for these simple matters, you should ask for evidences. Yes, now coming to the next part, which is readiness of assurance for business. Okay, so if I am a company who is wanting to get the assurance done, I also have to do some homework. Okay, so I have to understand what standards are applicable for me as a company. I have to build an internal robust ESG committee with, participation from different departments. So if you look at the diversity of data that needs to be collected for any ESG assignment or ESG disclosures, you have to get data from the production department, from the sales department, from the HR department on policies, etc. IT department on the data breaches and so on. So there are a lot of people, or departments involved in gathering of information. And like in my previous example, I said if you have multiple locations, you definitely have to have that uniformity in collecting that information. Okay, so that is something you have to ensure internally. Then identify the key data disclosures, requirements, and align data ownership across different functions and departments. Yes, digitize. Actually, again, that's a very important aspect, and we also generally, as advisors, what we do is we help organizations or we encourage them to have an ESG platform, if possible, if considering the volume of the organization, we would recommend this. But if they do not have an ESG platform, we tell them we can support you in the back end. You provide us the data, we will use the platform to process this information, which has all the required audit trails, etc. So definitely try and digitize. And value chain data collection. So collaborate with suppliers. Start including all these as a part of your vendor evaluation process as well. That will be a good starting point to start, to gather data from vendors. In terms of the methodology to be adopted, so this has to be conducted in accordance with SSA 3000 issued by ICAI. The different phases would be planning and risk assessment. So even as a part of, practically if I have to tell you, we always start off by studying the SOPs of all the different departments, right? As a part of internal audit, in fact, what we also do is we ask for, if we are the internal auditors or statutory auditors in an organization, or even if we are not, we would not hesitate to ask the client if they are able to share their ICFR reports, because those also give us insights about the internal controls, etc., being adopted by the company. And that gives us a good sense of doing one assessment and finding out what are the gaps that we can help to fill in the standard operating procedures from ESG point of view. So we study the existing procedures which are more focused on financials and other business related processes. But there we fill in gaps where one of the thing we again was could recommend is adding the vendor evaluation ESG measures as a part of the annual performance of vendors. So such recommendations can come into the planning and evaluation part. Evidence gathering, which definitely involves, collecting backup for every single data point that you are assuring. And analytical procedures, substantive testing to be carried out, and the final report. So again, always the draft assurance report needs to be first prepared and for review by the client, and then needs to be finalized. Next thing is why data integrity, obviously, so because one of the key topics here was data integrity, and which is very close to us all as auditors. So if data integrity definitely plays a very key role in ESG assurance as well, because first of all, it's going to ensure credibility and trust, mainly with your external stakeholders being customers, your investors, and also your regulators, right? So in that sense, this data assurance actually adds value and it helps to maintain the data integrity. Regulatory compliance, so you are mandated anyways by BRSR and even CSRD if applicable. Decision making, so yeah, like I was saying earlier, this should not be only looked as a regulatory compliance, but if you actually look at the outcome that comes out of the ESG report, it can be a very good decision-making tool for stakeholders. It is just important to highlight the right indicators and the outcome to your stakeholders. And then yes, greenwashing, because you're going to be able to highlight the correct areas for them to avoid these scenarios of greenwashing. Next, if we talk about data integrity, actually, I'll just take a few examples here, okay? So as auditors, I think you all should be able to relate to this. So source to disclosure traceability, which we always do even as a part of internal audits. And I think an example there could be a cement company which reports its scope 1 emissions. Auditors should report the CO2 figures and back it up with consumption logs, weighbridge, tickets, and any ERP entries that have gone into the system. So that is an example of source to disclosure traceability. For governance controls, establish ESG ownership, have approval workflows being set up in the organization, involve the board. So board oversight, I think, would be one of the key aspects when it comes to your ESG data and disclosures. So steel manufacturer integrates, in a fertilizer company, the engineers record energy data, sustainability. So here we are trying to understand how the presence of different departments comes into picture. So there's an engineer who's providing the energy data, there's a sustainability team which is consolidating the data, and then there is an assurance provider who is independently verifying all this information. So that's where governance controls have to be maintained. Segregation of roles has to be clearly maintained across the organization. Next thing is automated data capture and controls. I briefly spoke about this. Standardization. So one thing you have to be conscious about is if you're required to report on different frameworks. So let's say BRSR and GRI, the disclosures on these two have to tie out. You cannot give a different disclosure in one of the report versus the other. So maintain that uniformity everywhere. Data validation and reconciliation. So an example could be reporting water withdrawal and reconciling it against the utility bills as well as the meter readings data. Lastly, continuous monitoring. So again, one practical thing I would like to highlight here is whatever outcomes you're bringing or recommendations you're making as a part of your ESG assurance or assessment engagement, always have certain aspects highlighted where you can ask your clients to include certain metrics as a part of their MIS reporting. Okay, so if today they are not focusing on any of the ESG aspects, you can introduce these as a part of the MIS reporting or quarterly reporting rather than this just being an annual one-time exercise. Introduce these subtly as a part of the monthly and quarterly reporting as well. So yes, that's about how data integrity can be maintained. Let me hand over to Niharika to talk about greenwashing.
Hi. So basically, greenwashing is a very common phenomenon. I'm sure all of us have been, a victim of greenwashing. So basically, what does greenwashing essentially mean? Greenwashing is done by a company that is won't fill out a ESG disclosure, ESG framework. May fill out, but may leave. May fill out some parts of it, may leave out the rest of it. Make vague claims like net zero by 2050, carbon neutral shoes and all of that. However, you make such claims and then you sell that thing. Unfortunately, you also have a great impact on your organization. Like, let's just say suddenly you are brought in front of a regulatory board, and the regulatory board finds that you have been greenwashing, have been saying that your vegetables are all organic but they're actually pesticide fed. Then penalties, enforcement actions, scrutiny under emerging climate disclosure laws. Then there's a whole legal risk which no one can escape. If you're caught by the law enforcement agencies, no one can escape, and that generally would lead to consumer protection claims or shareholder litigation. And then naturally now we're in the digital phase, so then there's a whole reputational risk along with it, like loss of stakeholders' trust, investors backing out, you have customers backing out, you have the entire media against you. And then there's obviously going to be a financial risk, reduced valuation, cost of capital increase. And then, naturally through all of that, there's operational risk, which is, disruption due to corrective compliance. Okay. Now, practical data collation gaps that lead to greenwashing risk. So, 3 examples. I'm going to take you step by step. So, the first one is fragmented environment data across departments, which we discussed in the previous slide. So, you have energy, fuel, water data that are all maintained in separate formats. You have energy maintained in terms of, energy bills. So you have how much of money you've spent on energy. You have fuel in terms of liters. You have water in terms of the size of the tank. In terms of the size of the tank of a factory, you have that much of water data, which isn't exactly true, which is, just an assumption. And then, and then you have like no centralized department taking care of all of that. Your fuel bills probably, go to someone else. Electricity bills go to the finance team. So you have, so it's a bit of, a mess. So your risk then becomes inaccurate scope 1 and scope 2 emissions, which is what you have to report in your BRSR and your BRSR core, which then is checked by an assurance provider. And then, you have missing months of GHG, which you're just basing on assumptions, which again is thoroughly checked by assurance provider. And if the assurance provider is finding such large gaps, then there's certainly, something wrong. And then incomplete workforce and social metrics training, which is that HR captures headcount, but does not systematically track attrition, training hours, gender diversity, or contract labor data. So then, your risk is you're misreporting under your BRSR, GRI disclosures. You have an inability to calculate indicators like LTIFR and or even diversity ratios, or even like the BRSR, there was one wherein we had to say like how much money was actually given by the organization for all 5 tiers of towns as governed by the RBI. So you have a clear lack over there. And then finally is supply chain and scope 3 data absence. So this again goes back to what Poonam was talking about. You have procurement teams that often track their payments to to all entities that supply the factory that are all MSMEs. But, you have no idea on how much of carbon is emitted, on how much electricity does their factory use and all that. So you do have an, a greenwashing exposure generated there, by which companies might just say that, their supply chain is 100% transparent, but it's not exactly transparent since you have only 50% of the data. And okay, so this is one of my favorite slides. It's challenges in ESG assurance. So the first one is qualitative and subjective matrices, which is that very honestly, the ESG matrices do require significant judgment making and objective measurement. So for example, a company claims that its ESG risks are managed, but it has no formal risk management systems and only management discussions. So that is clearly a challenge in ESG assurance. And then non-standardized data processes, which is something we've also seen in companies that we've worked with, which is that let's just take a corporate that has got 2 plants. Plant A, the diesel consumption is in liters. Plant B is in diesel consumption is measured in rupees. So therefore, you have a data you have 2 types of data flowing in, and the corporate or the corporation needs to convert using estimates and then report it. Another example could be, say it's a global company, and we're talking about HR attrition. So one country counts its voluntary exits, Another counts all its exits. Therefore, in terms of reporting it, which one are you going to choose? Evolving internal controls. So, this evolves around the financial reporting as well. So a company has its electricity bills on the email, its fuel bills on a logbook. And the fuel bills are filled in every 3 months. The electricity bills come in every month. So there's no reconciliation of the entire system, either done monthly or quarterly. And then there's no audit trail for any data changes. So then you have a misstatement of emissions due to human error, and also due to a financial error, which I'm sure most of you will be able to catch. And then scope 3 complexity. So a manufacturer, let's just say, sources steel from 12 different suppliers. 8 suppliers do not measure their emissions, and 4 suppliers do. So therefore, the manufacturer then needs to use a system of assumption in order to calculate its own scope 3 GHG emissions. Another case, a voluntary survey for the usage of private vehicles was sent out to all employees in a company, and only 40% of them filled in. So what is exactly going to go out in the report? It's going to be a bunch, it's going to be, assumptions, it's going to be checked by someone, but most likely it is going to be slightly more or slightly less than what is the truth. And then evolving regulatory landscape, we as BRSR is yet very young, so we have 4 updates in a year, so it just keeps on evolving. So it's very hard for a company and its own, and even for us to keep track. And then translating technical requirements is again going back to what Poonam said, which is that sustainability information owners may use different terminology than others. And usually that leads to, lack of quantified data. Like operations team usually says that it generates minimal waste. But all of you as auditors know that, you need quantified data. You do need it in terms of, waste metrics. And then finally, there is flexible adaptive assurance approach, which is that, as ESG assurance providers, we've got to keep adapting ourselves with the company so as to provide the company its best assurance report. Yeah. Okay. And so this also, Poonam had mentioned that you do need board oversight. And this is what the board should consider, which is it should consider controls for assurance, which is strategic and sustainability objectives, which is, you need to align yourself with globally evolving regulations. You should also set yourself clear, defined, measurable sustainability goals, like what we do, which is we draw out an ESG roadmap, which is that we set your goals in accordance to quarterly and then yearly. And then you must build up a robust system to track and measure your progress, and also transparency increases with that. And then, a regular review of goals, and then whether one needs to be changed, whether one needs to be decreased. And then data accuracy and validation. All of you also know that you must have data, and that should be easily validated. So consistent, complete, and traceable ESG data along all functions, just the way you have traceable financial data across all functions. And then transparent reporting and stakeholder communication, which is that clear, balanced, and accessible sustainability disclosures. Evidence-based sustainability communication, which goes back into greenwashing. you need to provide evidence wherever you are saying that, a product is net zero, or you're saying that, the diesel is coming, or the electricity is coming from a renewable source. And then governance framework, controls, and independent assurance, which is defined governance structures with board level ESG oversight, which is a major thing right now. Then proactive adaptation to evolving regulatory requirements, which I've mentioned multiple times. And then you also need your own controls to mitigate legal, reputational, and greenwashing risks. And you obviously need a regular independent assurance with structured remediation and conflict management.
With this, we come towards the end of the session. We are happy to take, any questions. Yeah. Anyone? Yes.
The question is pertaining to the different sectors that we have. So, I mean, this entire concept of ESG, I mean, is it more related to the manufacturing concerns where there are, carbon emissions and health, safety, and environment comes into play? So, wherein, all these metrics are more measurable and thus more auditable in terms of, looking at the correctness. But whereas if you look at a sector like banking or finance companies, which are mostly into the lending business or accepting deposits, wherein your, all these carbon emissions or pollution, health safety matters would not be as much attributable. So how do we distinguish? Because when you say top 500 listed companies, I think a lot of banks and NBFCs would also be there.
Yeah, that's a very good question. So the applicabilities right now, it's a blanket applicability to just the top listed 1,000 companies, which covers, all these sectors. There is definitely a variance. Carbon intensive companies, would have the environment impact would be more in case of carbon intensive companies or manufacturing companies into carbon intensive operations. But if we talk about other companies, there is going to be some environmental impact in terms of electricity consumption as well, that which classifies under scope 2 emissions. So there's going to be some amount of environmental impact, but if we talk about social governance, for all the entities there is going to be requirement to report on those measures. But from an environmental point of view, definitely carbon intensive would have the major impact to report on.
Understood. Thank you.
No, but under scope 3, they will have to report on their vendors, their employees, transport, all those, diesel consumption, all that would be applicable for service companies and finance companies.
Right. So if right now actually the major focus is to report on scope 1 and scope 2 emissions, yes, primarily. Scope 3 is not yet mandated, but it is encouraged at this point. So yeah, that data will also have to come for the other companies. But if it is the carbon intensive company, we see a direct environment which can also be addressed and mitigated on. So those are identifiable risks actually which can be which can be immediately addressed, and hence the scope 1 and scope 2, because that is something which is within your limits and something which you can control, immediately act on. Scope 3 emissions are called as indirect emissions, where you do not have controls. Though you are reporting on it, you're not going to be immediately able to mitigate those risks. Hence the focus on scope 1 and 2.
In terms of your question, a whole lot of banking companies, service companies, they have a whole lot of water. They have a whole lot of water wastage, waste generation, and electricity use, as Poonam said. So may not be high on the GHG emission part, but extremely high on data centers use a lot of water. So the environment is sort of balances things out, like various parts.
Yeah, but it would mostly be a subset of the bigger gamut of manufacturing, right? I mean, whatever would be there for banking and NBFC, it's be rest assured that definitely it is at a larger scale for a manufacturing. So basically from an environmental point of view, maybe for banks and NBFCs, it could be a subset with kind of, some kind of variations. Now, for example, your, health and safety also for a, big manufacturing with so many plants and so many workers working. So from the social point of view, their health and safety, the number of accidents and the things which could go wrong in terms of, health and safety, again, that would be much higher compared to banking or NBFC, where it's mostly, corporate office job or a branch banking job, wherein, it is less riskier. So I am only trying to say that components would apply, but it would rather be a subset and could be a smaller set for banking or NBFC.
Sorry to interrupt. I think we have to wrap up the session, but if anybody has any questions, we are outside, we can definitely have a chat. And thank you all for your participation. Really happy to have you here and hope we meet again soon. Thank you. Yes, the FAQs, anyways, you could scan, but the other the presentation, etc., will be shared at a later point.
So you'll all agree you had a good session on ESG, setting the basics, the expectations, second, the standards, third, where it can be applied, how we can play a role. That is more important actually. We have a future here in ESG because one, it will currently help us in doing our internal audit, also facilitate in ESG tomorrow. Going forward, we can be also part of the ESG part of it and do it. I think Poonam and Niharika has done a great job. I think you can give a big round of applause for them. And as a token of appreciation, we would like to give a small memento to both of you.